Hi folks, Nick Shaheen here, recapping the week ending May 1st. Happy start for the month in the stock market. The scoreboard for Friday, plus 1% across the board, 1.5% almost on the NASDAQ, led up. What lagged were the small caps. It's pretty important for a couple of reasons, one of which it's a basket of 2,000 stocks. Speaks loudly. And the other reason is that yesterday's sell-off, yes, Thursday was a huge sell-off across the board, was on huge volumes. But first, let's address the ranges that are at hand. First of all, I'd like to point out the last-minute spike in Apple. Luckily for the options holders, it didn't close at 130. Otherwise, it could have messed up a lot of trades or little surprises here and there. The range in Apple seems pretty impressive today. Seems like somewhere around here, a couple hours into the trading session, consistent buying came into Apple into the close and pretty much supported the runs in the markets. Apple is a heavyweight, and when Apple moves up 3%, indices move accordingly. So 3% is a pretty good move. For the Qs, for example, that's 0.45% of the move. So half the move, no, 1/3 of the move is pretty much Apple in the Qs, for example. It is a heavyweight, and we have to listen to it. Zooming out Apple for the last, say, 10 days, you can see it was pretty impressive, and then the reaction to earnings fizzled on volume. It's like somebody said, let's sell it, and then let's buy it. So this week's pin at 125 was obvious from last Friday, and we noted it. And from here on out, I mean, it's the least of my worries long term. If I was invested in the stock market and I owned a whole bunch of stocks and I'm nervous about Apple, I should be nervous about everything else too. Because Apple is the best company with the best prospects on the planet right now. Having said that, everything is in doubt on the day like yesterday where everything sells off hard. Ranges, let's talk about ranges. What to do next week? Next week is going to be potentially violent. We have labor reports, we have Eurozone data points that tell us if the efforts there as far as QE are working or not. And so good news over there might be construed as bad news with regards to prices because people will think, okay, they're going to end sooner than later. But, you know, Draghi recently just said, I can't believe you're even asking me about ending. We just started. So it's a long shot. But here in the U.S., I think the points to look at are on Friday. Even though we have a lot of Fed speak in between now and then, and those can, you know, you're going to have the dovish people that are going to move markets up, and you're going to have the hawkish people that are going to move markets down. Now, if a hawkish person speaks dovishly or vice versa, a dovish person speaks hawkishly, then it's something to pay attention to. Otherwise, it's just noise. The Friday numbers are important, more important than the actual labor numbers is to see if there's heat in the labor. So in other words, the mandates on the Fed is inflation, but they're really focusing on labor inflation. So let's see what kind of participation rates we're getting within the employment picture. It's not just as simple as employment and CPI. But they seem convinced that they're going to move this year. I think it's not going to be June based on what we just heard. It's most definitely not June in my opinion, but they didn't say it so. So the move wasn't like on 3/18 when she said, I'm not raising rates in April, and the markets ran 50 points. This time she didn't say that. She said some stuff that could be construed by people like me. I would interpret it one way, you would interpret it the other person interpret it a third way. Therefore, the move was diffused, and that's the point. I love this. Way better than a huge spike one way and huge spike the other way. All right, the ranges are still in play. A peek into next week tells me that the ranges are still in play. We've been meandering. A little bit of room for upside, some room for downside. No commitment from bulls or bears, and I'm not sure next week they're going to have any commitment either way either. So the iron condors, for those of you who know how to sell spreads, are working best, and I'll continue to do those until they stop working. Some longs are good. Some shorts are good. Today CSX spiked on regulation news. Maybe it's a good short. I'm not sure. Maybe some cheap puts might be in order. I closed some puts in Amazon that were good. And so I just now have to look for individual stories, um, and also trade the indices with the range-bound thing. The buy the dippers are coming in. They came in today. They've been doing it. I don't blame them. They've been doing it so long. It's paying off. At some point, they will keep doing it a little bit too long, and a lot of them will get caught short. Things will turn. When, I don't know. Until then, I play the ranges. So playing the ranges has paid the bills. I will continue to do that going forward. As far as the ranges on the NASDAQ, yes, today's rally was impressive, but only to erase yesterday. So it's like nothing happened, really. The good point is the markets recovered Dow 18,000, SPX 2100, and NASDAQ 5,000 today. The only thing we're missing is the all-time high on the small caps. Small caps also bounced today. However, I said they lagged, and look how much lower they are, 50 points lower than the high this week. They didn't even recover yesterday's losses. And yesterday they led down hard on huge volume, and we'll address that in a second. ES today ran hard, but only to erase yesterday's losses almost, and then some, just a little bit. However, it is at a breakout point, so it could reach out for the highs of last week. We'll see early in the week. Apple, very good close today. We'll see if there's follow through. There's ex-div date coming out early May, and usually dividend reinvestment may cause some buying in Apple. So if I were to go long something, why not go long a call in Apple, like even a leap? If I believe in Apple long term, then buying a long-dated call in Apple would be a cheap way of actually participating in upside in Apple. As far as the NASDAQ, also impressive rally, but nowhere near the high that we had recently. Potential is still there. Most of the earnings are out, at least a lot of the big names. Some big names got hammered. Let's look at the volumes I was talking about. So let's start with a SPY. And I'm going to zoom into 6 months. Yesterday's candle was pretty scary, broke this white channel and came close to the long-standing channel that we'd like to hold. Today's candle averted both disasters. Good. Yesterday was on much heavier volume than today. Doesn't negate the bounce today. It's just an observation. Same observation volume-wise on the NASDAQ. Same observation on the NASDAQ's jump. But now look, we are higher lows knocking on roof. Yeah, we busted through it here. Will that roof hold, or will it break out again towards these highs? How about the small caps? Small caps broke the yellow trend emphatically and never looked back. Yesterday's candle was huge. And look at the volume of yesterday's candle. You know, more than twice anything around it. In fact, it was almost heaviest since the October correction. That's saying something. So is it the turn like in the October correction? So have we made the bottom and running back up? We'll see. Today's candle, yes, bullish, but still not even close to the bullishness that's built into the other indices, broader indices. Now, one thing I keep watching are the transports, and today they had a huge candle up, and I'm not sure why, but look at how many times they bounced exactly when they needed to bounce. They failed here, then they broke out, and then bounced and 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 bounced, and here they are bouncing again exactly where they need to bounce. If they broke this green trend, but if they break the red trend, the limit is really a box, not a line, then you know, we could shooting down to here, and that would not be good for markets in general. All right, so these are the top issues that are on my plate. Nothing fundamentally changed. My fundamental thesis remains the same. There's some room for upside. There's no crash up, and there's limited downside. In other words, we do have support. We do have resistance. The range is alive. Let's just trade the range for as long as it lasts. Nick, signing out.